All right, welcome everybody. Hey, so excited that everybody is here with us today. We're super pumped about being able to walk you through this process of setting goals and working with a financial scorecard. I'm alongside Jeff Bush from Grow My Profit, and Jeff is going to be sharing with us a little bit about his strategy on how to keep it simple, keep it structured, and scale your business. Jeff, welcome to the webinar.
Yeah, thanks, Dave. Excited to share these tactics with people today.
Yeah, well, tell them a little bit about your background as we kick off things today, and a little bit about how you came up with the idea of utilizing a scorecard versus a traditional written business plan as a guide.
Yeah, so having kind of started and grown 4 different businesses, from 3 of them from zero, scratch, like startup, and one of them was $500,000 a year in sales with 5 employees, and we took that to $40 million in sales with 170 employees. So kind of like this game that I've been in for 30 years, right? From 20 years old to now I'm in my early 50s, and watching how companies grow. It seemed like the first company I was involved with, all they would do is we'd have a quarterly meeting and review the P&L, which was always like looking in the rearview mirror, like this is what just happened. Here's how much revenue came in. Here's what our profit margin was. Here's our expenses, and here's our net profit. But we never really had a way to like project out 1 year or 5 years on how we were going to hit bigger goals. And I found that interesting. I mean, we grew that company without using a scorecard, but we were all kind of like flying in the dark. So later on, as I joined like CEO groups and learned more about kind of more strategic growth, I learned about this scorecard where we can write down our revenue goal and then back into it. Okay, let's build an org chart. Let's say we're doing $2 million a year in sales right now, and we've got 20 employees. What does the org chart look like for $20 million in sales? And we'd build an org chart and fill it in. Okay, we need 20 salespeople. We need operations manager. We're going to need not just a bookkeeper, but a staff accountant, maybe an outsourced, CFO. So it's interesting just to go through the drill. You're painting a picture of what the business looks like, in the future when you hit your big revenue goal. And then, so I started using scorecards on my second business, and I found it just got things crystal clear, especially for the team members and the managers. Here's your goal, and you're going to be monitored on this every week that we're moving towards the goal. If we get off track, we're going to have corrective measures. We might have to throw that plan away and design a new plan. Like a lot of these businesses were definitely failing forward, and having the grit to keep going. That's, I think, the part that a lot of people don't realize. When they're in it, they're like, this is horrible. When I'm in it, I'm like, this is normal. This is how it works. But having that scorecard built and having your management team, or even just a small team, just you understanding what we're going to do to get there. It's the roadmap, and instead of looking at a P&L of the past, the scorecard kind of shows the future and predictions, and make sure you're tracking your goals or not tracking. And if not tracking, corrective action. Let's roundtable this and figure out, why isn't this working? Let's try something else, so.
Yeah. Well, just for everybody's, understanding, what is a scorecard? This is kind of a breakdown of what's included. We're going to show you an example of a scorecard that we provide to all of our portfolio companies and our partners to be able to help them to track their metrics. But financial scorecard is going to have things like income, profit, margins, expenses, productivity, measurements, and obviously the totals of what's taken place. And that's really what's going to help people to create that standard of excellence that needs to be held to be able to get the company to scale. So this is an example that you use, Jeff, for your wedding venue called Hawk Ranch. Walk us through a little bit about where you grab this information from, and what does it take to be able to run this report? And is it something that you do, or is it something you hand off to somebody else?
Yeah, so this is my current business that I own. It's a little tiny business doing $1 million a year, 1 to 2 million in revenue, but we're still using the scorecard so everybody knows the goals. Our goal is to sell 8 weddings a month at $20,000. That's $160,000 a month in sales times 12. We're going to hit $2 million in revenue. That's the short-term goal right now. So we just kind of figure out how are we going to get there. So what you're looking at, and it's funny to look at this scorecard for $1 million, because when I had one at the ad agency that I just sold, it was 50 million. It was a lot bigger and more complex. But I used the scorecard when I built a mortgage company from 0 to $12 million in sales. I used it at the ad agency from 0 to 40 million. And now I'm using it at Hawk Ranch, which is a wedding venue that we bought that was doing $50,000 a year in weddings. We did $1 million last year, but we're trying to get to 2 million. So we kind of built, I use the scorecard all the same way. So it doesn't matter what the business is. It all is relative. There's revenue, profit, expenses, and friggin' profit, right? And then people. So looking at this scorecard, I guess this shows year to date through May. I have a newer version that goes all the way through September. And it kind of shows what our revenue is, what our gross profit is, what our monthly expenses are. I'm on salary for 10 grand a month to just have health insurance, at my little company here, and how much money we're losing or making. But then it goes into a little bit more detail at the bottom, like how many incoming leads are we getting per month? And like January is a huge month. Everybody gets engaged December and January. So we had 242 leads, but out of those 242 leads, how many tours did we get? Are we getting a hold of the leads and getting them down here to take a tour for weddings? So we did 30 tours. We sent out 8 quotes and we sold 8 out of 8. So that month we sold $159,000 worth of weddings. Our average wedding's $19,980. So we have goals like we want our average wedding to be $20,000. And right now, year to date, we're at $17,200. So we have a problem. What's wrong there? What do we need to change to get bigger weddings for more revenue and more profit? Leads are 242 leads in January. And then February dropped off to 153. So we're watching leads, sales, average revenue, profit margin, and we're tracking it in a scorecard. So this is kind of the high level. We drop into more detail, like when we have 4 sales reps, if all 4 sales reps are taking 100 leads and one of them's closing 2 weddings and the other one's closing 10, we have a conversion problem and we might have to get rid of a salesperson or retrain them, find out what the problem is. So we have a scorecard specifically for all the salespeople because these leads are expensive. So if you have salespeople that aren't converting the leads, you got to take corrective action, which either train or, manage up or manage out, and unfortunately, Hawk Ranch is no different than any other company I've owned. I just fired 2 salespeople 2 weeks ago. They took a whole bunch of leads and didn't convert and weren't willing to take the corrective action, the training. So we had to let go of a couple salespeople because of bad conversion. If I didn't have the scorecard and I was just sitting around thinking everything's great, we're heading towards our goal, I'd go broke. Salespeople taking leads, not converting, will put you out of business. So anyway, scorecard. It's so I use it. We update this every week. So we have like the sales manager plugging in all the numbers from tracking reports from our CRM. It's pretty simple. It's just an Excel doc, but it updates every week. We have the sales manager does part of it. The manager does the other part. And every week we look at this and have a quick meeting to just track progress. So I'm trying to think of your other question, who does it? Sometimes I've got an outsourced CFO that'll build like pretty complicated stuff, like when it involves like pivot tables. I'm pretty good in Excel, but it goes over my head pretty quick. Pivot tables and pulling from multiple spreadsheets. It's important to get the information correct. If it's not right, it just is worthless to do the meeting. And you kind of get into a groove of making this correct, adding it, and then you're like, hey, we're not monitoring like, if we do 10 weddings in October, which we're doing, out of 10, how many gave us a 5-star review? So we're starting to add a scorecard for how many 5-star reviews we get. And we're bonusing certain wedding coordinators if they get a 5-star versus a 4, because that helps generate more leads. So sometimes reviews are in your scorecard. We're adding things to it. Just the most important things to monitor. And I'm learning that in the wedding business. Here's reviews are big,
Yeah.
So every business has little tweaks, but they're not that much different,
Yeah. So you're basically taking in some of the important factors and dialing those in and putting them into the spreadsheet. And you've got a template for this. And that's something that if those of you that are watching this video, if you'd like to get access to this template, go ahead and fill out our business assessment and we'll be able to provide you with some resources like this to be able to give you an example of how you could build your own. or if you're one of our partnered companies and you want to partner with us, we'll show you exactly how to use it and actually consult you on implementing it. And what do you do so that it's not something that you're just left with as a scorecard, but you actually get the consulting and the advice to be able to understand the reports that are outputs from the data. So Jeff, in terms of your tracking tools, where do you know when to, hire more salespeople? When do you know that you need to start cutting people? What are you looking for in the report card or the scorecard to be able to tell you some of those things about ramping up versus ramping down?
So if I look at the last year or 2 years that I've been in this business, and I say, hey, the average closing ratio is 5%. I know if I get 100 leads in the door, I'm going to sell 5 weddings. So if my goal is 8 weddings, what is that, like 150, 160 leads a month? So I know how many leads I have to get. Now, if I find a way to start generating more leads, if I can go from 160 a month to 200, I can close at 5%. Now I can start doing 10 weddings a month instead of 8. So I guess I'm watching the leads and the conversion and the capacity of how much we can do here, and it's going pretty well at Hawk Ranch to the point where we might do 100 weddings and there's only 52 Saturdays. So we're selling a lot of Friday, Sunday weddings. So now I'm like, okay, we got to go buy another wedding venue. Like if we want to scale this up, this place could do a couple $1 million. But I might have to buy another wedding venue. And this is kind of fun. If I get my metrics are working here, I can go buy another one and make it work over there, because probably they don't have all this in place. They're not watching it like I am. So that's how the scorecard gets exciting and to grow business. So I don't know if I answered your question,
Yeah.
but watching leads,
create a baseline of this is what the average should be, and if somebody's below the average, I know that you've kind of followed the Jack Welch theory, is that firing the bottom 10% just to make sure that you're always making room for somebody that is going to be a top performer or above average performer. There's a lot of organizations out there that want to grow, want to scale, but maybe this is the one step that they've been avoiding, adding more team members, adding more overhead, adding more operational expense. What would you say to that business owner that wants to scale, knows that more sales people would actually be the thing that would be next for them, but they're not ready to take on that next step of having more salespeople? Any words of wisdom?
I mean, we talked to a business owner just a couple weeks ago that was saying, I did, $1 million in sales, but I sold all the business myself and I'm working, 15 hours a day and I'm experiencing burnout. And we're like, well, why don't we put a sales team on, and take some of that off of you? I mean, a real business, the owner of the business isn't out there selling and doing the install. And, so I guess if people say, I don't know if I want to hire a sales team, well, then just keep doing what you're doing. Experience burnout, hit your cap. Your business can only do so much with just you doing it. If you don't think about hiring people and delegating and duplicating yourself, you shouldn't be in business. You just stay self-employed and, do $1 million and make $250,000 a year and enjoy your life. But if you really want to build a business to 10, 20, 50, $100 million, you got to put a team on. It blows my mind that. And people are like, well, I don't really want to deal with salespeople. They're kind of high maintenance. Salespeople are building a sales team is not for the weak at heart. But if you have a big goal, that's the only way you're really going to get there. So I understand why people are like, I haven't hired any salespeople because I don't want to deal with it. Well, then you're going to deal with not hitting your goals. It's part of it. I mean, that's from my experience, 4 companies, I built it through expanding the salespeople. More salespeople meant more revenue. More revenue meant more profit, which meant I got to sell my company for 8 figures. I didn't like it, but eventually I had a sales manager, so I had a buffer, so I didn't have to deal with the salespeople directly all the time, because it's not easy. A lot of type A aggressive personalities. You deal with stuff running a sales team. You deal with stuff any group of people, but salespeople can be a little bit, tougher. But I don't know if that's the means to the end, I'm willing to do it, right? Because my goal is bigger than the pain of, oh God, I got to deal with people. I got to deal with a team of people. So I
Have you
think that's
hired
just
sales managers and been able to delegate some of the day-to-day sales management duties that maybe you don't necessarily love to do, so that you can focus more on the vision and the mission and helping the organization to advance as a whole. So that's another strategy, is to build a scorecard that a sales manager could operate. So we've got the sales comparisons. We do the comparisons between sales reps so that you have an idea of where the training may need to be required, or where there may be some opportunities for improvement. And then you've also got some simple strategies on, cash flow, and anything that you would say about this advanced version to really help you to see year-over-year growth and potential.
Yeah, I think what we're looking at here is our cash flow forecast. So just making sure we're not going to run out of cash, like how much money can I invest in advertising to get those leads coming in? If the salespeople don't convert the leads and I'm spending all this money, I could run out of cash. So this report is showing every sale we make. These brides make payments for 12 months. We're selling weddings a year in advance. It's a good cash flow business because they're paying up front, but we let them make payments for 12 months. So this is just kind of a spreadsheet more about, cash flow. How much am I selling? How many monthly payments? If I have to do a refund, if the bride pays all the money up front, or if somebody cancels a wedding and I got to refund them, all that is built into this. This is just a tool that allows me to have a better picture of where the business is at, because we're in growth mode right now, and I'm spending all of our profits to try to go from $1 million business to 2 million. I'm trying to double, and that sometimes is kind of expensive. So I want to know where I'm at. So cash flow forecast, margins at the top, and then I saw that we had our spreadsheet that was broken down by sales rep. So part of the scorecard is, if I have 4 salespeople and I want them all to sell 2 weddings a month to get to my goal of 8. Is everybody doing 2? Because if one guy's, well, they're all women in the wedding business right now. If one woman is selling 4 weddings a month and one's doing 0, and they're all getting the same leads, I never believe the salesperson that goes, "Oh, I got all the bad leads." Not true. It's been 6 months. It averages out over time. Something's wrong. Is it a training issue? What's wrong? So I'm using the sales scorecard. The sales manager's going in and addressing the issues. Hey, let's do this tour together. Why didn't you ask them to buy? Why didn't you ask them to sign the contract? You're not being aggressive enough. So we've got different issues within the sales team that, some aren't calling the leads, some aren't really good at building rapport, some aren't asking the right questions, the obligating closing questions. So they're missing the sale at the very end. And then some are selling $15,000 weddings, and we're like, hey, 20,000, that's the number, and so if you're selling small weddings, if you're selling cheap, that's easier to sell. So some of them are just getting weak and selling little weddings at the end because they just can't, really, they're afraid to ask for more money,
Yeah. Well, I know that in your business planning and financial scorecard, you've obviously just recognized, margins. And, one of the things that you've really found in your businesses is, finding additional ways to add values and increase those margins and making changes so that you can actually have a bigger margin to work with. And would you just wrap us up today with giving us a little bit more about what it is that you would be looking for if you were consulting a business and you wanted to help them to scale beyond the scorecard? What would you be looking to do to increase margins?
So let's say your business runs on 50% margin. So that's not markup, right? That's 100% markup. So something costs you $1 and you sell it for $2. That's 50% margin. And that's pretty good margin in this world. But what I found is when you start adding salespeople and marketing costs, 50% margin, that could cost 20 or 30% just in staffing. So what I always did is say, hey, how can I get my margin from 50 to say 60%, right? And if you have competition out there, you can't just raise prices and say we're offering the same thing for, 25% more in cost. So I always look for, every business has something you can add on that's added value to the customer where they'll pay a little bit more for it. In the wedding business, we started saying, hey, if you buy a $22,000 wedding instead of 18,000, we'll build you a wedding website and manage all your invitations for you. And that was something that cost me $500, and I was charging, $2,000 for that. So huge margin, huge added value. Now my wedding venue is offering to do something for the bride that she was going to have to do on her own. So every business, you just look at the product and go, hey, what else can I add on to take my margin from 50 to 60? And I did that at my ad agency, where I added on 5 products over 3 or 4 years that took my margin from 50% to like 67%. So when I'm making 17% more, if I pay the sales rep 10% commission, I'm literally like, when I increase my margin, that's what pays for my whole sales team. So it doesn't really cost me any money. I mean, some owners are like, hey, I'm going to have to pay a salesperson, 100 grand a year instead of me putting that 100 in my pocket. Well, that's kind of small thinking, but let's figure out how to take your pricing up 100 grand a year. So when you write the check to the salesperson, you're still making your 100, and there's ways to do that. So added value, added gross margin. That's so important, I think, to a business. And I think a lot of people ignore that. But that added pricing and margin and value literally paid for my whole sales team, So I had to sell at a little higher price, but I gave a little more and taught them how to sell and add value, talking to our clients and proving our value. And it was amazing. It paid for the whole sales team. So it never really cost me anything, And then, a few years later, I'm doing $10 million in sales instead of $1 million. And this guy isn't selling anything. I'm not on the phone with customers. I'm focused on the business. Now I've got a real business that's making money, even if I'm in Italy for a month, right? It's making money. And I got managers running it, and I can go from 10 to 20 million to 40 million. And that's exactly what happened. But that first year is a little tough building the team and getting it all dialed in. But it's great when it starts working. You can just throttle up and really increase revenue and earnings. And that's what business is about, right? More revenue, more profit, faster, right? It's all about money and timing. So I think that's where we can come in and go, hey, there's some levers we can push on and go into this system and really start doubling, tripling, 10 times your revenue, over 1 to 5 years, and build a real business, real profits. And, this system works. It worked in weddings. It worked in my mortgage company. Those are both B2C companies, but I worked in my ad agency that was B2B. So we just looked at buying a business, and they're like, you don't have any experience in this business. Why? We don't know if you're qualified. I'm like, what are you talking about? Every business is revenue, profit, expenses, and earnings. I know how to scale them. I don't need to know the intricate details of a golf cart in the golf cart business but it's amazing, right? Like, these principles work for everything. Doesn't matter. Even SaaS, software, technology, they're all a little bit different, but it's all, everybody I know in my CEO group built a scorecard, and it helped them hit their goals faster. They're driving revenue faster, and at least to know where the problems were. So excited to, share that with some CEOs, business owners, help them
Yeah,
grow
if you'd
faster.
like to have a conversation with Jeff and talk a little bit more about how we can end up helping you to increase those margins, increase pricing, add a sales team, and maybe even tweak, if you already have a current financial scorecard that you're leveraging, maybe we can tweak it and add some good value to you. But go to growmyprofit.com, fill out the free assessment, and we'd be more than happy to brainstorm with you, even share a template for the financial scorecard that Jeff has used, and serve you in that way. So thanks everybody for joining us today. We look forward to talking to you all soon. Take care.
Thanks, Dave.